Hi guys, this is CA Balakrishna. In this video, we will be revising Essay 210, agreeing to the terms of audit engagement. Now, before discussing the standard, first of all, I'll explain you what are the aspects that will be dealt by this standard. Okay, the brief structure of this standard. Basically, I have divided this standard into three parts. The first part deals with when to accept or continue the engagement. Now, I am an auditor. A client approaches me and offers me an audit engagement. Now, whether I have to accept this audit engagement or reject this audit engagement, this decision will be taken by the auditor based on certain conditions. Okay, we will be calling it as preconditions. Okay, if the preconditions are existing, then the auditor will accept the audit engagement. If the preconditions do not exceed, auditor will reject the audit engagement. These preconditions will be discussing. That is the first aspect that will be dealing in this standard. Okay. Second aspect, audit engagement letter. Now, auditor feels that the preconditions are present, then he will take a decision to accept the audit engagement. Once he accepts the audit engagement, he need to issue an audit engagement letter to the client. Okay. Now, what are the contents that should be included in this audit engagement? Okay, and what is the form of this audit engagement? These aspects will also be discussed by this standard. Okay, that is the second part. Next, there are certain special cases. Even these special cases are also related to audit engagement letter only. Okay, that is whether audit engagement letter has to be issued in case of recurring audits, that will be discussed by this standard, and whether audit engagement letter has to be issued in case of audit of components. Even this will also be discussed in this standard. Okay, this is the brief structure of this standard Essay 210. Now, first of all, let us start with the first aspect, that is when to accept or continue the audit. Okay, the decision of accepting or continuing the audit will be taken by the auditor based on whether preconditions exist or not. What are the preconditions? Okay, preconditions to accept the audit engagement. That means before accepting the audit, the auditor will check whether these conditions are present or not. Okay, now this standard specifies what are these conditions. Okay, there are some list of 4 conditions that has to be verified by the auditor. Let us see those conditions. First one, acceptability and suitability of financial reporting framework. What is meant by a financial reporting framework? We have already discussed in Essay 200. Financial reporting framework is a framework that is used by the management for preparation of its financial statements. Now, auditor has to check whether this financial reporting framework that is followed by the management is acceptable and suitable to the entity. Now, let's say entity is a banking company. Okay, client is a banking company. Now, banking company has to prepare its financial statements as per the guidelines issued by RBI. Okay, but the client is following Schedule 3 format. Here, the financial reporting framework is not suitable and acceptable. In this case, auditor will not accept the audit engagement because the financial reporting framework that is being followed by the client is not suitable and not acceptable. Okay, that is the first precondition auditor will check. Okay. Next precondition the auditor will check is he will confirm with the management whether management knows and acknowledges its responsibility to prepare financial statements. That means auditor will get a confirmation from the management stating that management knows its responsibility to prepare financial statements and management also acknowledges to prepare its financial statements. That is simply preparation of financial statements is a responsibility of management that should be acknowledged by the management. Okay, that is the first thing that has to be acknowledged by the management. Next, establishment of internal controls. Okay, even establishment of internal controls in the entity is also responsibility of the management. Thereby management should understand and acknowledge its responsibility to establish the internal controls in the entity. Okay, next, auditor will also get a confirmation from the management, okay, stating that management allows the auditor, or management gives the auditor whatever the documents, whatever the reports, whatever the information, whatever the additional information that has been asked by the auditor. And also management gives auditor unrestricted access to all the persons in the entity for the purpose of obtaining audit evidence. Okay, these three aspects has to be understood and acknowledged by the management. What are the three aspects? First one, preparation of financial statements. Next one, establishment of internal controls. Third one, giving the auditor all the information, reports, documents, additional information, and unrestricted access to the persons. Okay, basically these are the four preconditions. See, let us see it. Management understands and acknowledges its responsibility to prepare financial statements, to establish internal controls, to provide the auditor with access to all information, documents and records, additional information requested by the auditor, and unrestricted access to persons in entity to obtain audit evidence. Okay, these are the four preconditions. First precondition, second precondition, third precondition, fourth precondition. Hope this is clear. These are the four preconditions that has to be verified by the auditor before accepting the audit engagement. If these preconditions exist, auditor accept the audit engagement. If these preconditions doesn't exist, auditor will not accept or will not continue the audit engagement. Okay, now apart from these preconditions, auditor should also check whether there is a common understanding of terms of audit between auditor and the management, or those charged with the governance. That means the terms of audit engagement are understood in same way by both auditor and management, or those charged with governance. Okay, these two conditions, if these two are present, auditor will happily accept the audit engagement. Okay, preconditions must be present and there should be common understanding of terms of audit engagement. Okay, by this we have completed the first part of the standard. Moving to the second portion, that is audit engagement letter. Okay, client approached the auditor, auditor checked for the preconditions, preconditions are present. Now once the preconditions are present, auditor will decide to accept the audit. Once he decides to accept the audit, he will give a audit engagement letter to the client. Okay, previously client would have issued a appointment letter to the audit. Okay, in response to that, auditor will give a audit engagement letter to the client. Now what should be included in this audit engagement letter? Okay, and what should be the format of this audit engagement letter? These aspects will also be dealt in this essay 210. Let us see. Audit engagement letter contents. What are the contents that should be included in this audit engagement letter? The first aspect that should be included in this audit engagement is what is the objective and what is the scope of the audit. Okay, basically in case of a statutory audit, the scope will be very wider. Okay, whereas let's say in case of a stock audit, the scope will be very limited. It would be confined only to the stock. Okay, this scope and objective of the audit must be included in the audit engagement letter. Okay, you can simply say that this audit engagement letter is like a contract between auditor and the client. Okay, now that is the first aspect that should be included in the audit engagement letter. Next, audit engagement letter should also contain responsibilities of management. Okay, what are the responsibilities of the management must be included in this audit engagement letter, so that in future there will not be any disputes between the auditor and the management in relation to the responsibilities of the management. Okay, basically what would be the responsibilities of the management? To prepare financial statements, to establish internal controls, and to give the auditor whatever the information he has asked for. Okay, And if at all there are any additional responsibilities, even those responsibilities of management should also be included in the audit engagement letter. Okay, next, responsibilities of the auditor. Okay, even the responsibilities of the auditor should also be included in the audit engagement letter. What would be the responsibilities of the auditor? First responsibility will be to conduct the audit in accordance with standards on auditing. Next, to issue the audit report based on the audit that he has conducted. Okay, basically these will be the responsibilities of the auditor. And identification of applicable financial reporting framework. That means the client has been following a particular financial reporting framework for the preparation of financial statements. Now, which financial reporting framework is being followed by the client? Even this has to be included in the audit engagement letter. Okay. Next, basically it would be the duty of management to determine the financial reporting framework that is applicable to it. Okay, and that applicable financial reporting framework has to be included in the audit engagement letter. Next, what would be the expected form and content of audit report? Okay, these are the 5 contents: 1, 2, 3, 4, 5. Okay, these 5 contents has to be included in the audit engagement letter. Now the question is, apart from these 5 contents, whether additional terms can also be included in the audit engagement letter, or only these 5 terms has to be included in the audit engagement letter. See, apart from these 5 terms, any other terms that the auditor and management feels that has to be included in the audit engagement letter can be included in the audit engagement letter. So this is clear. Next, format. What should be the format of this audit engagement letter? It must be mandatorily in a written format. Okay, oral audit engagement letter is not accepted. Okay, it must be in a written format. Next, change in the terms of audit engagement letter, audit engagement that results into lower assurance. See, auditor has given audit engagement letter and he started conducting the audit. Okay, he started conducting the audit, and during the audit, management approaches the auditor and requests the auditor to change terms of audit engagement letter. Okay, auditor started the audit, and during the audit, management requested the auditor to change the terms of audit engagement letter. Whether this type of request can be accepted by the auditor or should not be accepted by the auditor, let us see that. Now, once management requested, the first thing the auditor will have to check is whether there is a reasonable justification. Okay, this term reasonable justification is important. Okay, the auditor should check whether there is reasonable justification for the changes that are requested by the management. If the auditor feels that there are reasonable justification, then the auditor can accept the changed terms and he can include them in the audit engagement letter. Okay, that would be the first case when there is a reasonable justification. Now let's say there is no reasonable justification. Okay, auditor finds that there is no reasonable justification for the changed terms that are requested by the management, and management does not allow the auditor to continue the audit as per the original engagement letter. Okay, management saying that you accept these terms of engagement, changed terms of engagement. In case you don't accept these changed terms of engagement, we will not allow you to conduct the audit as per the original engagement letter. Okay, in this case, what the auditor has to do? In this case, auditor has to straight away withdraw from the engagement. Okay, because he doesn't find any reasonable justification for the changed terms, and he is not allowed by the management to conduct the audit as per the original engagement letter. Okay, these 2 conditions must be seen. Okay, if these 2 conditions are satisfied, auditor can straight away withdraw from the audit engagement letter, audit engagement. Once he withdraw from the audit engagement, he should also determine whether there is any responsibility on him to communicate this type of withdrawal to the management or those charged with governance or any other authority. Okay, as per the law, in case there is any responsibility on him to communicate this matter, he has to communicate that he has withdrawn from the engagement to those respective people as per the requirement. Hope this is clear. Now here you can get it out that what is meant by a reasonable justification. Okay, what is a reasonable justification? Now let's say at the time of entering original audit engagement, letter, management misunderstood some of the terms of audit engagement. That is the reason why management requested for change in the terms of audit engagement. That would be a reasonable justification. Now let's say auditor conducting the audit, and auditor requested the management to provide physical access to the stock or to provide physical access to some of the assets, but management doesn't want to provide that physical access. Okay, thereby this is the reason why management wants to change the terms of the audit engagement, thereby not allowing the auditor to access the stock physically. This would not be a reasonable justification. Okay, basically the auditor has to decide, the auditor has to apply his professional judgment to determine whether there exists a reasonable justification or there doesn't exist a reasonable justification. Okay, that has to be decided by the auditor based on his professional judgment. Okay, next, that is the second aspect that we have covered relating to audit engagement letter. Okay, next, moving to the special cases, that is audit engagement letter in case of recurring audits. Let us see. Now let's say first year I have been appointed as auditor of, let's say, some A Limited. Okay, in the first year I have given the A Limited the engagement letter. In the second year also, again I am only appointed as an auditor. Third year also I am only appointed as an auditor. Whether auditor should mandatorily give another engagement letter in the second and third years also. Okay, in case of recurring audits also, that we will be discussing. Generally speaking, okay, generally speaking, a new audit engagement letter is not required in case of recurring audits. Okay, this is generally speaking, a new audit engagement letter is not required in case of recurring audit, but there are some exceptional situations. In case of these exceptional situations, auditor has to give a new engagement letter in case of recurring audits. What are they? Let us see. Exceptions. What are the exceptions? The first exception, change in the terms of audit engagement. Okay, it is obvious that if there is any change in the terms of audit engagement, auditor has to give a new engagement letter. Okay, thereby in case there is any change in the terms of the audit engagement, even for the recurring audit also, the auditor has to give the new engagement letter as per the changed terms. Okay, next, change in senior management. Okay, now let's say in the first year auditor has issued a audit engagement letter. At that time there were certain management present. Okay, now in the second year there is a change in the management. Okay, the management that is present in the first year is not present in the second year. Even in this case also, auditor has to give a new engagement letter for the recurring audit, since there is a change in the management. Okay, for the new management, the auditor has to communicate the terms of the audit engagement. That is the reason why he has to issue a audit engagement letter. Next, change in the ownership. Okay, in case there is any change in the ownership, even then the auditor has to give a new engagement letter for recurring audits. Change in regulatory requirements or financial reporting framework. Now let's say the entity was following accounting standards for preparation of financial statements in the first year. Now suddenly entity has shifted its financial reporting framework from accounting standards to Ind AS as per the requirements of law. Now there is change in the regulations or change in the financial reporting framework. In this case also, auditor should give a new engagement letter for the recurring audit. Hope this is clear. Next, change in nature and size of the entity's business. Now let's say in the first year when the auditor was appointed, entity was carrying on manufacturing business. Okay, during the first year auditor has given some engagement letter. In the second year also auditor was appointed as auditor. The same auditor was appointed, and in the second year the company has closed its manufacturing business and started a new business, let's say banking industry, okay, banking business, it has started banking business. Now there is a huge shift in the nature of business from manufacturing entity to a banking entity. This requires the auditor to give a new engagement letter as per the change in the nature of the business of the entity. Hope this is clear. Next, indication that entity misunderstood the objective and scope of the audit. Okay, if the auditor feels that in the first year I have given some engagement letter, but I feel that in the first year entity has misunderstood the scope of the audit or objective of the audit or the terms of the audit engagement letter. Okay, thereby I need to give more clarity to the entity. Okay, thereby in the second year, that is in the recurring audit, I will give a new engagement letter with a more clarity to the entity. Okay, thereby if auditor feels or auditor gets any indication that entity has misunderstood the scope or objective of the audit, he will give a new engagement letter. Hope this is clear. Next, audit of components. See, components means let's say the entity is having a branch or entity is having any subsidiary or associate, those will be known as components. Now there is A Limited. Now I have been appointed as auditor of A Limited. Okay, and I have also been appointed as auditor of some, let's say, subsidiary of A Limited, associate of A Limited, or some branch of A Limited. Now whether I have to issue a separate engagement letter to the subsidiary or one engagement letter for both A Limited and subsidiary would be sufficient. Okay, that is one engagement letter for both component and entity would be sufficient. For this question, we cannot straight away tell that yes, auditor has to issue separate audit engagement letter, or no, auditor should not issue separate audit engagement letter. This can't be said straight away. Auditor has to decide based on certain conditions. Okay, what are those conditions? Okay, based on certain criteria. See, it depends on who appoints component auditor. Okay, this is one of the criteria that the auditor has to check in order to determine whether he has to issue a separate audit engagement letter for the component. Okay, that is who appoints the component auditor. If parent entity itself appoints the component auditor, in that case there will not be any necessary to give another engagement letter to the component, because the parent entity itself has appointed the auditor. Okay, but it is not final that if the parent entity only appoints the auditor should not issue the audit engagement letter. Auditor has to decide it based on the situation. Okay, but the standard says that before deciding you consider this point. Okay, whether you have been appointed as auditor of component by the parent entity itself, you consider this. Okay, based on these factors you determine whether to give audit engagement letter or not to give audit engagement letter. Okay, standard doesn't straight away tells the auditor to either give or not to give the audit engagement letter to the components. It is left to the auditor whether to give or not to give the audit engagement letter based on these conditions. Okay, by considering these criteria. Okay, next criteria, legal requirements. Okay, standard asks the auditor to check whether there are any legal requirements to give separate audit engagement letter to the component. Okay, you check this factor also. Okay, auditor will check. Next, degree of ownership by the parent. Okay, whether the parent entity holds almost 90% of the component, or parent entity holds only a small portion of the component. Okay, you also consider this aspect in determining whether to issue separate audit engagement letter or not. Next, whether separate audit report is to be issued. Okay, whether you have to issue separate audit report to the component also. Okay, if you have to issue separate audit report to the component, then it might be necessary to issue separate engagement letter also. Okay, you consider this factor also. Next, degree of independence of a component from the management of the parent. Okay, you consider all these 5 factors and determine whether you should give a separate engagement letter to the component or a single engagement letter to both parent entity and the component. Hope this is clear. Next special aspect, limitation on scope prior to audit engagement acceptance. Okay, before auditor accepted the engagement only, the management has put some restrictions on the auditor. Okay, auditor has not yet accepted the engagement. Okay, client has approached auditor. Okay, now auditor is checking some preconditions. Okay, auditor is verifying whether preconditions are existing or not. During this stage only, the management puts some restrictions on the auditor. Okay, if management puts some restrictions on the scope of auditor, what the auditor should do? If the auditor feels that these restrictions that has been put on me will result in disclaimer of opinion. Okay, management has put these restrictions on me and I accept the engagement and I conduct the audit, and while giving the report I give a disclaimer of opinion. Okay, if that is the situation, then why to accept the audit in the first case? Okay, if there are any limitations that has been put on the auditor, it would be better not to accept the engagement at all. Okay, not to accept. Same has been said by the standard. Auditor shall not accept unless required by law or regulation. Hope this is clear. By this we have completed revision of essay 200, essay 210. In the next class we will be meeting with another standard.